Assalamualaikum and good day everyone. Welcome to UMT Massive Open Online course. I am Wan Zuriati Wan Zakaria, your lecturer for today's topic. In the previous topic, you have been introduced on how to identify biological assets and agricultural produce specifically for plant. You also learn about the three phases in the transformation process of plants. So today, we are going to learn about initial investment in the plantation business. So the learning outcomes of today's topic are: first, to identify the initial investments of agriculture business for plants, and second, to identify what constitutes as asset or expenses in the initial investments of agriculture business for plants. Before we are going to discuss on initial investment, this topic also covers the categories of plants, their differences, and the criteria of assets for plantation business. There are two categories of plants: bearer plants and consumable plants. Consumable plants are plants that harvested as agricultural produce or sold as it is at their maturity. For examples, crops, pineapple, pumpkin, and winter melon. However, bearer plants are those other than consumable plants which are used in the production or supply of agricultural produce when they meet their maturity. In common, the bearer plants are expected to bear produce for more than one period, such as fruit-bearing trees, oil palm trees, and rubber trees. So that to classify whether the plant is bearer or not, there are three criteria should be considered. First, the plant is used in the production or supplies of agricultural produce. Second, the plant is expected to bear produce for more than one period. And third, the plant has a remote likelihood of being sold as agricultural produce except for incidental scrap sales. Accordingly, it is important for any of agriculture businesses to make careful considerations whether their plant meets the criteria or not. If yes, it can be treated as bearer plant in order to account for it. The examples are as follows. How about the initial investments for the plantation process? Before we look at this issue in detail, let us now define initial investment. Initial investment cost is the cost of setting up the agriculture business and shall consist of all expenditures whose incurrence are directly attributable or can be allocated on a reasonable basis to bring the business to its operational conditions. From the definition, it is clearly seen what are the criteria of assets in the initial investments of any business. What are they? They can be either assets or expenses. Let us start with the biological assets that are the trees. Referring to the conceptual framework of accounting, assets are prescribed as any items that brings, first, future economic benefits, second, controlled by the entity, and third, in which value can be measured reliably. These criteria can be applied as well for the plantation business in the agricultural industry. How can we identify whether the trees are biological assets? Let's now analyze oil palm trees as example. When the farmers start to grow the trees, they start with baby plants. Do these baby plants meet the recognition criteria of asset? Can the plants give the future economic benefit to the entity? What they can give to the farmers? The fruit. The fruit then can be sold at market. Can we consider them having economic benefit? Absolutely, yes. How about control? Can we control them? Yes. The farmers plant them in a separated area in the orchard. The farmers can do anything to the trees. They can sell the trees, they can harvest them, and also cut down the trees when the trees stop producing any benefits to the farmers. Therefore, the trees meets the control criteria. Lastly, can the value of the trees can be measured reliably? Yes. How do the farmers do that? The farmers will know the value based on the market price. For example, how much people are willing to pay for a piece of land with matured oil palm trees. The oil palm trees meet the recognition criteria of assets. In another situation, let's discuss about trees that grow wild in the forest. Wild banana trees, for example. Can we consider them as biological assets? Maybe not, because the farmers might not have full control over the trees that live in the land of which does not belong to the farmers. Let us now look at the examples of other assets in the initial investment. Cost of acquisitions of land, licenses and rights, cost of land clearing and other land improvements, construction cost of plantation buildings and other plantation infrastructure such as irrigation system, cost of plantation machinery and equipment. All of these costs shall be capitalized as property, plant and equipment. These costs should be treated as expenses. Among the costs of planting business are wages, maintenance costs such as fertilizers, pesticides, chemicals for soil improvements, and the like. Utilities expenses such as electricity and water should be considered as expenses. However, all these costs, if they appear again in the subsequent period, they are treated as expenses. These expenses will be disclosed in the statement of profit or loss and other comprehensive income. The rule of thumb is that if any cost meet the criteria of asset, then the cost will be capitalized and will be shown in the statement of financial position. If any costs that do not fall into the assets category will be expensed off and then charged to the statement of profit or loss and other comprehensive income. To conclude, initial investments are costs of activities that agropreneurs have to pay at the beginning of the business. These costs can either be treated as expenses or assets. Assets should be disclosed in the statement of financial positions, whereas expenses will be charged in the statement of profit or loss and other comprehensive income. That's all for today. Thank you.